We're back, everybody. Merrill Chandler, your host of the Get Fundable podcast and your guide to the Get Fundable universe. All right. In this episode, we are going to be talking about some very important changes that are happening among lenders, and everybody's trying to get on board. Walmart's getting on board. Google's getting on board. Fintechs are all trying to crowd the consumer banking space and are offering complete crap in order to entice borrowers to come and spend money, or to get their debit cards that report to bureaus, or get credit cards that are junk cards and ultimately ruin your profile. When we come back, everything I just said is going to make sense, and a whole lot more. Just be prepared, because there is your fundability is being threatened on every side if you don't know what to look for, if you don't know how to avoid these landmines. I'll see you on the inside.
In the constantly changing world of fundability, the big question is this: how are entrepreneurs and real estate investors like us, ones who want to grow our businesses and who are tired of paying for really expensive alternative lending, how do we tap into the most inexpensive money available and do it without the hassle of typical borrowing? That is the question, and this podcast will give you the answers. Welcome to the Get Fundable podcast with your host, Merrill Chandler.
All right, everybody. Welcome. Merrill Chandler here, your guide, your guide to the Get Fundable universe. And in this episode, as I promised, we're going to be talking about some fascinating trends that are going on in the market. Some of these we touched on in various news updates that we do weekly, but the trend is so powerful and it is headed in one direction and one direction only, that I needed to make a podcast about it. I needed to inform everybody who's in my tribe, everybody who's binging these podcasts, what to look for, what's happening out there among lenders. And the bottom line is, you guys, is COVID has inspired everybody to drive to electronic banking and to masterfully create relationships through electronic or digital relationship building strategies. All right, that's a mouthful. So I'm going to break it down. First of all, banking has been, we've had a lot, huge numbers of beliefs over the generations. You walk into your bank, right? And there you meet with a teller, and your teller may know your name if you visit often enough. And maybe even if you're a private banking client, one of the private bankers or the branch manager know your name, right? It's all very, it's designed to create a personal experience so you feel comfortable leaving your money there, right? That's generally this experience. But in COVID, I remember the letter that we received. I'm a Wells Fargo. One of my banks for my QFE is with Wells Fargo. And Wells Fargo literally sent a letter saying, we're going to be shutting down a number of the branches in your area. So here's the closest branch to you, because they knew my home address and they gave me the closest branch. They shut down several of these branches during COVID. One of the things that they learned is there was a massive savings for them, and more on this in a moment, because they just posted here we are. We're publishing this July of 2021. They posted second quarter earnings of $24 billion between the top four banks: Citi, Wells, Chase, and Bank of America. $24 billion in profits compared to a year ago, $6 billion between them. And they thought they were doing well at $6 billion last year, because they were more and more capital was coming, because fewer people were qualifying for lending. Remember, we talk about the target, and the lender target is wide in prosperous times. And so we optimize so that your ability to borrow, regardless of how small the lending target is, you're able to get approved. That's the entire purpose of Fundability and credit optimization. Well, they just posted 24 billion in profits between the four of them. Why? Because they are getting rid of, well, a number of reasons, right? But they are aggressively lending. Lenders make money when they lend, but they're chopping off billions of dollars in overhead every single month by by ramping up their online customer experience and ramping down their hard assets, their buildings and the management, and paying people to come to work instead of doing online banking. So online banking started as a really subtle thing. You remember back in the day, it's been a few years now, but the first real online banking was where you could take a picture of your check and it be deposited by phone. Do you guys remember how revolutionary that was a few years ago? Everything that has been driven by COVID to create more and more of this online customer experience. The trade magazines, the webinars, and the symposiums for lenders that I attend, and I got a ton of resources for us today. Everybody talks about the banking CX, the customer experience. So what they learned is COVID said, you know what? People are still willing to bank with us, and it's convenient for them if they can do it at home. We don't have to have as many offices. Sure, we want to have enough in a community so that somebody can come and say hi to a human being. We don't want to get rid of it completely. In fact, one of the articles that I read where Citi didn't want to go skinny, and that's kind of the trade term that they're using. Going skinny is reducing the number of branches that they have, the hard assets that they have. They're putting up more ATMs so that you can make a deposit if you need to actually go somewhere and not do a physical deposit. You can swing by and drop it in an ATM. Right? So the trend that we need to be prepared for, and Fundability, oh my word, you guys, I am so happy about this because it means everybody is shifting to automatic underwriting. So here's every one of these things that I'm going to list or repeat to you guys is an article or a symposium, a white paper or a symposium that I've attended or that I have read, and it's so much fun to see what's happening. So, white paper: the future of customer experience in banking is personalized. So remember that we were accustomed the threshold of what a good customer experience is based on walking into a branch. So everybody is trying to figure out what is the best way to replace the in-branch experience with and keep it online. One of the other ones was an embracing of full service video banking. You're banking with a banker at Zoom. So instead of a phone call, many of these banks are exploring doing alpha and beta tests on having Zoom calls available instead of a phone call. So imagine when you're calling your bank and you look on the back of the number and it calls that bank. Imagine having another one that says, here's a video link, go click on that or type in that, right? I have my own personal URL that goes straight into my meeting room. So it's as fast and easy as that. So imagine you're going to Chase, Wells Fargo, and you type in your link on your phone or otherwise, and it goes straight to, it identifies you, make sure the account information is all there, and now you are video banking with somebody at a branch or in a call center. That's where we're going. In my personal experience, we used to do everything by phone, and when we split out because of COVID, and we moved all of our people to home officing, we flipped on the switch, and now the vast majority of our client conversations are over Zoom instead of a phone call, so we can continue to build. So yes, I'm really pleased that we're ahead of that video nurturing curve. But that's one of the symposium presentations was, hey, you got to start embracing video banking. So all of this is becoming so much fun. Now, the next one, 5 steps. Here's a white paper. 5 steps to build a profitable digital borrower experience. Everybody's teaching the banking support industry, as well as the banking decision makers themselves, are all in on creating a better and better and better experience. Well, let's see. Digital account opening in under 10 minutes. That was a white paper. Digital account opening in under 10 minutes. That was one of the massive holes that was discovered as a result of COVID, because people were like, oh, I got to go. You're telling me I got to go into the branch. You can't open an account for me because I got to go into the branch. And that was just a massive fail. Wells Fargo, our clients have to open up several banking accounts for their funding strategies, right? And so they got to open up business banking accounts, and some of them weren't able to do it because no one was at the branch. It was a massive fail on the banking's part. So what do? They respond in kind, and now the banking support industry is supporting. How do you open up an account in 10 minutes? A checking account. Now, does that make it cool and fun for us? Absolutely, because we don't either have to leave our house or we get to limit our exposure. But now imagine if you open an account in 10 minutes and have a Zoom call with a banker who then gets to give you that personal experience. That's where bankers are going. And you heard it here first, because there's so many cool things that is going to automate this process. And we'll get to automation and underwriting in just a minute. So let's bracket that, because we're going to tie all this together. Now let's go over here. Everybody's getting into the banking business. All right. Walmart has been selling prepaid debit cards for years. They're actually converting I listened to a symposium on Walmart, how Walmart, there's another group called Green Dot, more in a moment, but Walmart is converting their prepaid cards into checking accounts, because, as I've announced in one of our previous updates, if you haven't heard it, Walmart is actually going to be installing bank branches, Walmart financial institutions, in every one of, or many of their stores. Talk about a distribution chain. They're a big box store. They already have tens of thousands of people coming through their doors on a monthly basis. And that demographic, the Walmart demographic, is an easy play to say, oh yeah, I bank with Walmart too. This is insane, you guys. Walmart. And there is a rush for fintechs, financial technology companies, to get into the retail banking business rather than just the loans. The Marcuses of the world, the SoFis, the Cabbages, etc. They are now looking at retail banking, being able to open checking accounts, being able to offer credit cards. And we'll get to what all this means in a little bit. But more importantly, you guys, the good news is, if we maintain our awareness of the tiers, if we maintain of what is a good credit instrument and what instruments create negative drag on our credit profiles and our borrower capacity, we don't have a problem. But if you get sucked in, there's green dots, the Walmart, they're all tier 4. All the fintechs are tier 4, which means if any credit instrument they offer, they're not they're not valuable contribution. Think of it this way. You want a business line of credit. So do you think that Chase or Wells Fargo or any of the big, powerful business lenders, do you think they're going to give you a $100,000 business line of credit on your Walmart credit card reputation? Not going to happen. So we've got to keep the awareness. While everybody's coming in, it's going to get noisy and it's going to get messy. But you heard it here first, and I'll continue to give you updates in both our weekly financial updates on our Get Fundable Facebook group, as well as being able to see more and more attention given in the different podcasts that we're going to be producing over the months and years. But I'm telling you, another one here, add form processing to your financial application. Form processing is another means of auxiliary data collection. So you have your standard application, right? Here's all the data points for that application. Then they're adding form processing so that they can collect a copy of your driver's license through a photo, verify identity. They're collecting other data about your perhaps spending habits, etc. So they're kind of beefing up what their applications are looking like. And there was even a white paper on how to support your customers. Remember, these are all banks, financial institutions, white papers to the C-suite level folks, the CEOs, CFOs, CTOs, and the CMOs. How to support your customers with a skip a payment program. What they told FICO, what COVID has taught FICO and the lenders, is that offering a skip a payment program or these deferrals did not cause a massive loss of revenue. In fact, it increased the interest subtly for the number of payments that were skipped or deferred. That interest was just put onto the total so that the borrower had those interest payments were being collected and then had to be required to get to a zero balance, right? You had to pay off that extra interest. But the default rates have not significantly increased. So now they're saying, hey, how do we reward, this paper was talking about, how do we reward our borrowers and depositors with a skip a payment for positive borrower behaviors, right? And now, between you and me, we want nothing to do with that, because that's going to add interest. And we're actually, if we're offered a skip a payment, then and we take advantage of it, then unless we need it, I'm all in. If you financially, if it significantly improves your financial cash flow position. But when it comes to fundability, we don't want to take advantage of that, because those skip a payments or deferrals, because we're sending the message, times are tough and you need to watch me. And then we end up in the risk department. Okay. So there's a couple other things that I wanted to address for our millennials and Gen Z listeners. There's an article about 4 ways banks must change so that millennials and Gen Zs will love them. And when I reviewed the article, guess what the preponderance of those 4 steps are? Go digital, make it easy on the phone, and let them have a face-to-face connection. This is crazy, you guys. Everything is moving to make it easier, faster, and better for us, right? And then now, 2 final points. And one is amazing for me, and the other is amazing for you. One of the big pushes for digital, opening up checking accounts electronically and reviewing account information and having video access to our bankers or electronically. Everything is moving towards automatic underwriting as the must for all applications. Now, some of us, especially as boomers or old schoolers, man, we may say, yeah, I like having, now, maybe nobody has ever said this, but I'm just going to pretend that it's true for somebody. Yeah, I like getting out my taxes and my financials and all my deposit records for the checking account records for the last year and taking them and putting them manually on a banker's desk. Said no one ever. Now, so the point is that everything, the trend over the last 10 years has been going automatic underwriting, but it's been limited significantly by to tier ones, tier twos, and a few high-level tier threes. You're the USAAs and the Pentagons, Fed credit unions, and the and Navy Fed, etc. Now, even the community banks and the local credit unions are going berserk because to keep market share, they have got to speak to people's health and wellness issues. They're I haven't got time to go to the bank issues. And so more and more, even of the smaller institutions are going to automatic underwriting. Well, that is brilliant for you, because the second you know what the criteria are, what are the 40 check boxes that you need to check to get an approval, that puts you in charge of your approval. You just got to check those boxes. And of course, that's my mission, is to help millions of people understand how to be fundable, how to check those boxes and get approvals through automatic underwriting. Well, all the banks are going there even more. They're depending on automatic underwriting software. So the skills to be fundable have never been more important, you guys. Never been more important. You have to be fundable now. Before this year is out, there's just going to be dozens and dozens, even hundreds more smaller institutions who are going to start grading you by software algorithms rather than hard copies of your documents. So we have got to become fundable. Well, as we say, you got to get fundable, you guys, because the banks they're not going to have a mechanism for proof documents. Over the course the next 24 months, the requirements to provide proof documents is going to diminish significantly. So what are you going to do to be prepared? What are you doing with your profile so that you know all the check boxes and you can get funding just by sitting at your damn desk and either opening an account with a video banker, that's coming, or filling out an application knowing exactly what they're looking for, and that having all the databases that they ping all match up perfectly. Your data is synchronized perfectly, and everything that you're doing qualifies you for funding. It's happening, you guys. It's happening. And every single white paper I read, every single presentation from banking institutions and Fannie and Freddie are all going to improve the customer experience, give them access online to forms, applications, check account openings, and even a banker. Guarantee you we're going to video banking fast. And then my final point, and this is the massive win for millions, but the fulfillment of my dream. One of the presentations that was done was called Mission Failure: The Banking Industry's Approach to Financial Health. And basically what that presentation outlined was that there is a massive failure of financial literacy is failing, and financial literacy is just the definition of what's a checking account, what's a credit card, what's just the bare minimums. Nobody but us, nobody but Get Fundable is actually engaged in borrower education. See the difference? Financial literacy and borrower education. Look up we'll put in the show notes the link to the podcast we did here this year about the difference between financial literacy and borrower education. But I'm telling you, we're developing now. It is likely to be ready by end of year, an entire borrower platform of education so that banks can send their depositors ways to improve their fundability, send nonprofits that are working with folks who are either the credit invisibles, they're not fundable, or they don't even have any credit, how to train them on how to become fundable. Sending out, our intention is to send out a Fortune 2500 companies where they're receiving every single one of the benefits of being an employee of the Fortune 2500 is to receive weekly strategies and tips and techniques to help them become fundable, which will then drive them to greater and greater opportunities to become educated so that they are no longer stepping on the damn funding landmines that are blowing it up. Now, consequently, while we're developing the borrower platform so that we can make it right now, there is no true borrower education. And so while we're developing that, the banks are all moving to automatic underwriting, and we're going to be meeting in the middle where we're training borrowers how to meet those automatic underwriting guidelines, online applications, online checking accounts, and video conferencing with their bankers. These two are meeting. 2022 is going to be the marriage of millions of of people learning how to become fundable with lenders and financial institutions who now can drive, can inspire and build that customer experience that they're talking about. But what good is a smiling, happy face if the borrower or the checking account or savings account opener doesn't know what they want in order to get that next car, in order to get the right kind of credit card, in order to qualify for a home? That's where those meet, and I'm committed to. I'm so excited about what is happening. Thank you for joining me. This is Merrill Chandler, your host of the Get Fundable universe and your guide in the Get Fundable podcast. Keep binging, like, love, review, share, get this word out so that everybody knows how to continue to build the relationships with the banks. Because guys, we call it relationship building, but imagine that it's an algorithm on how to fall in love. Well, that's what is happening in the banking industry. How we can be amazing, be the perfect borrower, and they can give us the perfect banking experience. That is what we've got coming for us. We'll see you next time.
Thank you for listening to the Get Fundable podcast. Please leave comments because Merrill would love to read about your aha moments from this episode. And be sure to visit getfundable.com to read our blog, get important links, join our community, and much, much more, like ordering Merrill's tell-all book that is changing the world, The New F Word. And you got to tell your friends about this podcast because we want them to get fundable too.